Traders, Anthony here looking at gold. Look at this crazy price action. I'm going to go out of here. I want to show you this. Let's go out to a weekly. This is clearly in a bearish. Order flow is heading south. That's what's going on here. So the banks are invested or have been invested heavily in shorting this market clearly on the weekly time frame. Now this move here has got me very intrigued. I mean, this is huge. For this candle to set up like this, it's taken a massive amount of injection of capital in here. Short. Now they've really worked this range, this balance area. We'll call it. Let's say we've got this red candle. Yeah. I mean this whole range through here. Okay, that's been worked to death. If we go down to the lower time frame, you'll see. Obviously, they've engineered liquidity in here. You can see this spike up. So the intention is clearly to take out stops here and short this and make a ton of money in the process. So where to from here? We've got this crazy retrace, and I'm a little bit wary. Well, my bias is definitely to go with the trend. The trend's bearish on the weekly time frame, all up. That's where big money is flowing. But let's just have a look at this on the daily, and we'll get a little bit closer to it. I've got a bit of a rule of thumb. In a downtrend, here we go. This is picture perfect. This is the sort of thing I'm always looking for. Okay, clearly daily time frame downtrend, weekly downtrend. So I'll grab a fib like this point here, for example. I'm going to pull my fib from high to low, and it has to come back through this red zone. And my entry is going to be within the 61.8 to 786, right? That's a classic Fibonacci retrace, trend continuation. If I see the setup on the lower time frame here, rotating, rolling over, whatever it does, it will give me, you can see here there's equal highs, you get a bit of a spike up, lower low, that's the setup to short it. Whenever I see price, just grab this Fibonacci again. I mean, admittedly, we have lower highs through here. I like that. Let's just grab a fib and pull it back. It's pushed through the 78.6. I mean, this is bullish, big time. Just this leg here. But the overall order flow is bearish. So I'm looking for an entry point in here, but how am I going to go about that? That's the questions. We've got this distribution range through here on the daily. With that in mind, let's just head down to the 4-hour time frame now. Just be a little bit careful, guys. I mean, look at this thing. We've definitely, look at this thin candle. There's room for this, and I would say, I wouldn't mind shorting it at this level, actually. If we grab the fib here and grab it from this low to high, retrace down, there's room for this to move south. We've got this thin candle where it's pushed up from. This is the point of origin down here with this leg. I'm okay with that. So, I mean, I would look at shorting this around the current level, and I'm thinking, it'll be on a daily time frame. There's definitely risk involved, guys. Look, see, we've got this downtrend, but look how far it pulls back here. You see that? Takes out these previous highs. Understand that the big guns are going to be hunting liquidity above previous highs, okay? So we've got that. See the 78.6, see how it's traded up through that? So just be a little bit careful. We could see, this could take a stab at liquidity above here, guys. That's what I'm saying. So we've got this. Let's just copy and paste that. We've got this high. It wouldn't surprise me. I wouldn't put it past them to run it up in here. So you want to be really careful with this. Now, if I'm shorting this, I'm going to be looking for a fairly wide stop, and a smallish position, because it's not as clean a setup as I would prefer. Anyway, my idea with this would be we grab a short tool. Even if you go in at a market, I'm going to be setting up my stop loss above both of these highs. My target's going to be down in here somewhere. Yeah, I mean, that's, what do we got here? That's about 3 to 1. But a tighter stop, and that will get taken out quite easily. Now, the thing with this, I'll be going in with a very conservative position size. Even if you traded this on the 4H, and I'm going in with 0.15% of my account, something like that, and it's going to be a wide stop. Just keep taking money out of the markets. I think that gets me out of trouble. And 1-to-1 is going to be trend-based fib extension. This is my risk-reward tool. Show you this. 1-to-1, I'm going to go something like that. So that's going to be TP1. down in here above this. Yeah, that's a perfect level there for T1. I'll be looking to take a good 2/3 of my position off here. Now TP2, let's have a look. You'd come in above this range, so it kind of makes sense. There's your T2 at 2-to-1 risk reward, something like that. Go for broke with this. I mean, you know, we might see some more downside. So I'd be looking to just scale out, take 2/3, take a little bit more off here, and then leave the rest in and try and get a bit out of it. If this continues down, that could be quite nice. So guys, look, that's my take on gold. Trading it on the daily time frame, wide stop, small position. And I think there's, you know, because we're in a trend here, the probability factor is with us. But don't forget the possibility that this takes us out. That's very, very real. I will say that the trend continuation with these setups pull back into these balance areas, as I've showed you, it will generally do the job. Occasionally we'll get taken out, but you know, if you manage your risk well and don't get too emotionally, don't turn into an emotional basket case, could be a good thing. Okay, guys, with that comment, I'd love to hear your thoughts. I hope you have a great day. Safe trading, and we'll see you in the next one.